Evening. Welcome to our Sunday evening in Australia, Sunday morning in the UK, and probably overnight in the US. But welcome to our weekend weekly webinar update. I've got Shaun Downey with me from the UK. Shaun, are you there?
Yep, I'm here.
Great. Tonight we're going to take about 45 minutes out of your life, and we are hoping that it's going to be a very worthwhile 45 minutes. We're going to update you with global market outlook like we do each week. We're going to look at the Dow, gold, the dollar, the euro, and any sort of important markets that have been moving. And then at the end of that, you've obviously got time to ask questions at any stage. Please feel free to put your hand up using the facilities available in this webinar. If you do want us to look at a market or you just have a general question. So yeah, like I said, 45 minutes. Tonight we'll probably get started with major markets. Just a little bit about Shaun and I. Shaun, would you like to introduce yourself?
Yeah, been trading since 1979. The tender age of 16. Traded all asset classes at that time. Run some private funds, technical commentaries, written books, and coached and mentored professional traders since the early 90s. So pretty busy, and then continue to do that on the professional client base and getting involved in stocks with the retail space as well, which is what I'm helping you with.
Terrific. And myself, I was a trader for Optiva Australia for about 7 years, and during that period made $100 million. Still trade today. Was lucky enough to get Shaun as my mentor, and I've been working with him for many years now, and enjoying it thoroughly. So in terms of this webinar, Shaun, can you see that PowerPoint presentation?
Yeah, no.
Yeah, okay. So really this webinar is for you if you are committed to changing your financial future. That's why we put these webinars on. We're interested in committed people. This webinar is for you if you're sick and tired of trading indicators that don't work. I know that there's many of them out there, and typically the one thing that they forget is time. They get stuck on one time frame, and it is the common theme with our software uses many time frames. This is certainly the webinar for you if you want to get expert opinion. Between us, we've got 50 years of experience, and we're going to cover global markets, including shares, currencies, bonds, and commodities tonight. This webinar is for you if you do want to get an unfair advantage over almost every other investor out there. And we say that because we do have cutting edge trading technology that you're going to see tonight. It is, as far as I can tell, unique in the world. And this webinar is for you if you want your questions answered about certain markets. Please put your hand up. That's what we're here for. I mentioned you'll see cutting edge trading technology in action. And finally, look, if you're just an experienced trader and you want to, get an edge, or you want to do something a bit differently, or get a different view of the world, this is the place to be. And finally, if you want to learn how to get involved with us or become part of our online community, we'll show you how. So right now, can you see my screen, Shaun? You can? Can everyone?
No, just seeing your...
You're just seeing my ugly head.
Yeah, I'm
Okay.
seeing you, handsome man.
All right. Well, I thought I was actually sharing my screen, but let me come back. Here we go. All right. There we go. All right. So
Yeah.
Please, everyone, just have a quick look through this general information and disclaimer. It is important. So Shaun, highlights for the week?
Highlights for the week was that I missed most of it. And I didn't really miss too much.
Yep.
I was doing the seminar for the Society of Technical Analysts in London on Tuesday. So it was, what I would say this week was, first thing, very few signals. So very quiet in terms of anything coming up. And that includes futures and foreign exchange and indexes as well as individual stocks. I think it's important for people to remember, new people, is that we don't like talking for the sake of it. If there's nothing going on and there's nothing of interest, then we don't say anything. I think I posted no more than 3 things this week, and it probably would have been maybe 1 or 2 more if I hadn't been out Tuesday and Wednesday. So not a lot going on, and it was what we regard and we have come to know very well. This was a typical mid-month counter trend moves. So we're going to talk a little bit about that. We had the Fed on Wednesday. From what I could see, there wasn't anything that they said or did that wasn't already flagged to the market, but the dollar instantly fell. Gold rallied in dollar terms and rallied a little bit in all currency terms as well. I like to look at certain commodities and put them through 6 or 7 currencies divided by each other just to see whether a move is for real. And gold did rally last week, so it wasn't just based on the dollar weakness. Equities pretty quiet, and takeaways in terms of sectors and things that we've been talking about in past weeks. Sectors at the bottom haven't changed. There absolutely no movement there whatsoever. However, the ones at the top have changed slightly, and semiconductor equipment has surged to number 1. So that's now the number 1 sector. I had a look at the top 10 stocks by market cap within that sector. There's 34 in total, and all 10 of them were breaking out. So they were making new highs, had no resistance. So in contrast to banks, which had been leading, we've had something else take over. And that can maintain. Normally what happens is when a sector becomes number 1, it stays number 1 for a little while. So I certainly wouldn't expect semiconductors to suddenly reverse. The trend has to get tired, has to become more and more crowded, which is exactly what we've seen in banks. So we had a blow off top in banks the week before, and we had slam dunk signals the following day, and interest rates go up, which is normally good for banks, and their share prices did absolutely nothing or slid a little bit. So followed the script there, but overall a quiet week.
And Shaun, would you mind, just for anyone that's listening tonight that's new, would you mind explaining the services that we offer to people from beginner to professional?
Well, from the beginner point of view, we have the inner circle on Facebook, which is where we sort of communicate on a daily basis about what's going on or things that are of interest. So that could be individual stocks, can be the overall markets. You tend to do the market wrap videos. I tend to write the articles on sectors or individual stocks, things like that. And then we teach you how we look at markets and how you use the software and the unique tools that we've created. So we're there to hold your hand. There's no secrets. It's not a black box. It's not some mystical thing that that you're not going to be told about. People can go as deep as they wish because all the components of what make up trading safely are visible, and we're more than happy to explain them. Also, don't care how many times you ask me the same question. You can ask me 100 times. It doesn't bother me. I want to make sure that you understand what you're looking at and what we're doing. So we're pretty big on sectors, what's fashionable, what's unfashionable. So we're looking for stocks that are fashionable and have been leading the market to turn over the other way. So banks are in that setup at the moment. And then we're looking at unfashionable stocks, so the ones that are unloved, and we're looking to buy them and wait for signals there. But time is the key. The timing point is very important. And so one advantage in our method is that we tend to be, you don't have to do a huge amount of work. You could probably do 10-15 minutes a day, and that would be enough. And we're more interested in what's happening at the end of the week or the month or the quarter. So there tends to be a bit of a concentration of effort or timing of signals as far as we're concerned. And so that makes life a little bit easier. It's not the end of the world if you miss a month, miss a a few weeks, it's not going to make any difference. We're very much in it for the long term, and creating some longevity there. For the professional client, it's a little bit different. The visualization is different. Within Trading Safely and Technician, we've greatly simplified what you see so that effectively anybody can understand it. Typically, if it's in the professional world, it looks a lot more complicated because we have all the workings visible underneath. And typically, someone would need to spend 3 days with me for me to mentor them. That's what you did originally, for me to explain all the intricacies of what's created. And then once they've learned that, then I sort of hold their hand, make sure that they're not missing things. So I know what they will trade and what their time horizons are. And I sort of glorified alert service, I would call it. Professional client base, we have people using our tools on 2-minute charts, trading the S&P, all the way up to people who are big hedge funds or in big banks where they're trading very strategically. So the tools work across all time frames. It's just and the principles are the same. And once someone's grasped that, then something that looks very complicated actually suddenly becomes pretty clear. So there is a difference between what the professional client base sees and what the retail does.
Yeah, and you'll probably notice that I've been flicking between a couple of software packages. One is CQG, one is ChartIQ. The difference between the two is about $25,000 a year. So we've done all our work in this CQG package, and we've had it programmed into this ChartIQ space. The ChartIQ itself is free. Our software sits up here on top, and it can be activated on a subscription. In this fashion, you can avoid the $25,000 payment that I have to make each year on CQG. But so that's the advantage for you guys. You get access to cutting-edge technology at a very low cost, and you get Shaun and I here to do our best to walk you through how to use it and how to make the most and get the best value out of it. So look, at this point, we might just run through global markets. I've got the Dow up here first. We've been saying for a long time now, it's not a sell until the market tells you it's a sell. There's nothing at all. If I come back to, so first of all, this is the Dow Jones Industrials Average. It's a 720-minute chart. And what you're looking at here is a bunch of pivots. You can think of it like a ladder. So there's several time frames here. There's weekly, which is yellow. There's monthly, which is pink. Quarterly, which is brown. Semi-annual, which is blue. And there's no yearly pivots here, but they would be orange. And the idea is really, really simple. If you think about it like a ladder, if you close above the ladder at the upper end of it, then it's going to go up. If you close below it, then it wants to go down. If you close in the middle, then the market will typically be without direction. So, for example, this week the Dow Jones sat between those two yellow pivots. So we got to the end of the week, and that's the most important point, the end of the week. So what happened at the end of the week? Where did it close? Well, it closed right in the middle. So to me, that just means indifference. But obviously, the more indifference you have over time, then the closer you are to something happening. So, for instance, if you've been rallying for many, many weeks and all of a sudden you have 3 weeks of indifference, it's probably telling you the market's running out of puff. But in the case of the Dow, where we've closed at the end of 2016, where we closed above this upper quarterly pivot and this semi-annual pivot and this monthly pivot, it's a really, really strong market. So there's absolutely no reason to sell it until the market tells you that it's time. And so far, it's not time. Okay, so when would it be time? if I look at this market right now, well, to me, when a market closes above a quarterly pivot, it's a buy signal on a long-term basis. Okay, so we're up here right now. So we're about to get another buy signal effectively. So the Dow may well rip back this week and test out this 2487 level. It can fall several hundred points and still be strong. Okay, so for me, weakness would be apparent here under the monthly pivot at the end of at the end of the month. So we've got about 10 days, or whatever it is, 12 days. The market is strong. Don't stand in front of it. Shaun, have you got anything to add on equities before I run through the S&P?
No, not really. I think you covered it. It's pausing, but there is no reason to be short. When I'm looking at sectors, I always talk about what's going to take over and lead the whole thing, and we've definitely got that with semiconductors. There are some big stocks in that group, and they have no resistance. So the things that are taking over, leading the market, have the ability to rally. I always go in and look through all of them just to see where they are. What would have concerned me if I'd looked at the top 10 semiconductor stocks and they were all coming into some previous resistance from a long time ago or something like that. That would raise a warning to me. But as it is, absolutely nothing. So don't stand in front of the truck.
Yeah, it sometimes helps to look at like a big picture chart. So I've got a monthly chart here of Dow, and this has come up a few times. So each of these bars here is a month, and the top of the channel is still some way away, 21,700. But really, what I'm interested in is what happens in here. But one step at a time. So it's important to look at the big picture. There is a very strong trend in place. We're well contained. There's no sign of weakness. So therefore, don't try and sell it. If I was to look at the S&P, we're going to see a similar story here. I'll just use the ETF, the SPY. I'm going to tell you a very similar story. Okay, so at the end of the last year, we closed above the quarterly pivot. We closed above the semi-annual pivot. They're long-term uptrends. And the market's not looked back since then. And we're going to have another effective buy signal up here, assuming that the SPY can hold this level here and not close back under this quarterly pivot. So everything is pointing up, and no need to stand in front of it. If I look at the Australian market, the All Ordinaries, that one's quite interesting. It's made new highs, well, new recent highs. It's at a decision point in time. The monthly pivot is actually the same as the quarterly pivot. That's actually quite rare, but that is an extremely powerful level in time. If I do see the All Ordinaries closing over 58, 82, 53 at the end of this month and the end of this quarter, then that's going to be quite a signal. And the reason why is because at the end of last year we had a bullish finish to the year on a semi-annual and quarterly basis, and now is the opportunity for the All Ordinaries to step up. If it doesn't, well, that's not a bearish signal. It just means it needs to consolidate and might test the lower quarterly pivot going forward. So it is going to be a very interesting week. There's not a lot to do in the markets this week, honestly. It's a matter of waiting till the end of the month. The markets are going to make distributions in all likelihood around these quarterly pivots that I keep pointing out, these brown ones. And when it's like that, there's not much you can do. You just have to wait, because the permission for the market to move will come on the first day of the next month. It's like opening a can of Coke. It goes from contained to a market that can move quickly, and it's all about time. So this week I'm not expecting too much other than the lines in the sand are drawn, and we just need to see whether we're closing over the line or under the line. And when we go through the markets, you're going to see that. So for instance, if I go back to gold now, we pointed out on gold, we've been tracking this in our inner circle sort of on with very frequent updates. if we come back to last year, we closed neutral on an annual basis. We closed bearish on a quarterly basis. The market got oversold. We rallied. When we look at the monthly time frames, we zoom in now. So we closed above this monthly pivot, the upper pivot. That sent the market higher. And then here, right on the last day of last month, it closed under. And why is that important? Because, well, the higher time frame trend is still down, because at the end of last year, we've got a quarterly downtrend here. So really, that's why this market has ripped back up this week. It's because it's decision time for that quarterly trend. And you won't know until the end of the quarter. So in all likelihood, we're probably going to make a range around this brown line at 1226.5. And it's not just this market. As we flick through the markets, just watch how many markets have ripped back to either the quarterly time frame or the monthly time frame. It's like they don't really care what's going on in the world. All the markets are interested in is, well, we're coming up to the end of the quarter, so let's test out the quarterly levels that are important. And that's what the software that we give you identifies are those important levels. So for me, frankly, I'm not interested in doing anything in gold until the end of the month, because if we do hang on to 1226.5 and we close above it, to me that just says, well, we can go back test this upper annual pivot at 1264, because that's the next pivot in time. But at the same time, if we close under 1210 and take out this lower monthly pivot and fail to close above this upper quarterly pivot, well, that's a license for gold to get murdered, and there's a big gap underneath it. So if we move to, say, the dollar index, here's another one. It's just, big picture, the dollar is clearly in an uptrend. At the end of 2016, we took out these quarterly, semi-annual, monthly levels by closing up here, and we've been in a corrective phase. And now we are honestly just making a distribution around this quarterly level, and I'm going to be fascinated to see where we end up at the end of the quarter. If we're above, then this higher time frame uptrend is going to kick back in and the dollar can take off. Otherwise, there's obviously some more consolidation going on, and perhaps the dollar can backtest this lower annual pivot. But the long-term trend for the dollar is still up, and it would honestly, because it's in a yearly uptrend, it would take a close under the yearly lower pivot to reverse that long-term uptrend. So these little oscillations, they're to be expected. The bigger and the longer a trend has been in play, then the more the reactions, or the greater the reaction can be. And so that's probably what we're seeing right now. Like, this counter trend reaction here looks quite large, but really that's just a quarterly reaction, because it is in a long-term uptrend. So therefore, if the trend is mature, then you should expect bigger corrections. So for me, just fascinated to watch this quarterly pivot. You want anything on that one?
No, I think you covered it there. I mean, it was pretty poor based on what the Fed did and said. But as you say, it's just an orderly move down. If you call up the euro, then that gives us a bit more insight between what can happen there. So when you look at the euro there,
this is
done the same
euro.
thing, isn't it? Yeah. So again, it's gone to the pink line and stopped. So I think, as I said at the beginning, it just all feels like it's mid-month counter trend moves, and it's where we are in 10 days' time that matters.
Yeah. Yep. And so euro, guys, nothing's changed with the euro. We got, look at the end of last year. There's the lower quarterly pivot. We closed underneath it. Tells you at the quarterly level, it's going down. It obviously got very oversold. Both the monthly pivots moved outside the quarterly. That, to us, that means the market can have a short-term counter trend correction, which is exactly what we have. But interestingly, and this is what we pointed out in the videos before this move up in the euro, we pointed out that, well, at the end of January, actually the euro closed above the upper pivot, and then at the end of February, the euro avoided closing under that lower pivot. And if it had, then in all likelihood it probably would have pressed lower, but it didn't. And now, 3 weeks ago, we pointed this out. It closed above the upper weekly pivot. Now the market is just testing time. It's coming back to this quarterly pivot into the end of the quarter. So in my mind, it's pretty simple. You know, if it does close above this brown pivot, then it will in all likelihood test 1.1098, which is the annual pivot. The biggest time frame is the annual, and it's still in a downtrend. So, and if it happens to fail at this quarterly pivot and close back under it, well, we're probably off to new lows. But I'm happy to stand back and just wait for the market to tell me in time. What else has been moving this week? Look at bonds, 30-year bonds in the US. So 30-year bonds on a quarterly basis. In the end of 2016, we closed all the way down here. We were very oversold, but it's been in such a weak market that it hasn't really been able to bounce. It's just been in a sideways pattern. Now, just recently, you know, we had a move lower. We are trying to test this lower monthly pivot here and see if we can hang on to it. But I think if it closes back under that 149.096, and just there's going to be more weakness on the cards. So, but the point is, you know, bonds did turn around here and come back to test this lower monthly level, and it's right on time. You'll often see that. Another example of where time is the dominant factor and price secondary. We look at the pound. Pound's another one, seemingly weak, but really when you look at it, I mean, big picture, it's still weak for sure, but there's been no real weakness in the last little bit. You know, if we come back to, obviously the pound is in a long-term downtrend by virtue of the fact that we closed both these brown pivots at the end of the year. But if we look at what the market's done since then, at the end of each month, well, it's neutral there, it's neutral here, it's neutral on a monthly basis now. So really, you know, big picture, the pound's still down, but you're looking to sell any rallies. But there's been no monthly sell at the end of any month here. So until then, really it's down, but we're waiting to sell any bounces. Shaun, anything on the pound?
Trying to steer as far away from it as possible. I think there was some buys on the pound cross rates this week, but it's the pound has got its own version of a credit crunch, a story that just goes on and on and on endlessly, and it's called Brexit. So we keep on getting this story, that story, blah, blah, blah. And I just think the pound is going to continue to be buffeted. You know, one day it will perceive it to be bullish or something, and then bearish. So I just think the pound is going to be trapped for quite a while, and really steering something pretty dramatic is going to have to show up for me to get remotely interested in it. Nice if you just want to trade, day trade a sideways market, but otherwise nothing strategic as far as I'm concerned.
Yeah, so look, we're right in the middle of the range at the moment. So just see where it closes at the end of the month, and that should give you a little bit more information. I mean, look, this week it's closed bullish above this weekly upper pivot, so maybe that means it does want to test this upper quarterly pivot. But don't forget, you know, you shouldn't really be buying the pound because it's in long-term downtrend. So better to wait to sell it. And so for me, you know, honestly, it'd be great if it does pop up here. I'd love to sell it. But then the signal will be the weekly close on the downside under one of these lower pivots. And if I look through the last 3 months, the market hasn't closed under any of the lower pivots at any point in time. So there's been no reason to be short on a short-term basis. Okay, so that's a pretty important message, guys. Wait for a weekly close under a lower weekly pivot. If you want to confirm where the market's going, especially when you're in sideways like this for a quarter, wait for that lower close under the lower weekly pivot. That's probably enough for global markets, unless someone put their hand up and ask for market in particular. Shaun, any sort of stocks that sort of come to the fore?
No, not really. No, I mean, it's pretty. No, not at all. I think there's a few individual stocks that were setting up as overextended that we wanted to talk about, and that'll probably be it.
Yeah, okay. Well, if that's the case, then we might just look at a few stocks that have come up on some scans that have hit our quote board. So we're following them, and we're following them because they've got good setups. So what that means is that, for instance, they might be in a yearly uptrend and a quarterly uptrend, and then they've pulled back on a monthly basis. So we're interested then in the market sort of closing positive, and I'm going to show you in a bit more detail when I run through some of these stocks. But all these stocks exhibit the sort of the flavour that we want out of a market. That is buying dips in an uptrend or selling rallies in a downtrend, or just entering into trades from extreme overbought, oversold. So, for instance, if I look at this stock, okay, it's American stock. We'll just run through what that's saying. Okay, so at the end of 2016, here's our yearly pivots, the orange ones, up and down. We closed all the way up here, so it's bullish. However, it was overbought. How do we know that? Well, because the monthly pivots, rather than being inside annual pivots, they're right outside. So that's just saying the market's strong. It's due a pullback, but it's something that you want to look to re-enter from the long side, because guess what? Here's the upper quarterly pivot. Here's the upper annual pivot. Here's the upper semi-annual pivot. They're all very bullish levels, and we've closed above it. So I want to look to buy dips. And this market has shown a pullback, and right on time. This is perfect. We come back and we're tackling this quarterly level into the end of the quarter. So I'm very interested in watching this stock S.AP for the end of the quarter. And right now, in the short term, it's bullish because we closed last week over this weekly upper pivot. And if I look through this market, that has not happened in at least probably about close to 4 months. So I'm watching AP as a buy in an uptrend. And all these stocks here are basically going to exhibit the same characteristics. The reason I've got all these stocks here is because we can scan for this kind of setup by virtue of the fact that we are able to look at time. So for instance, if I look at, say, CVX, you're going to see a very similar story. We've got a market that's closed up here at the end of 2016. So therefore, it's above the semi-annual upper pivot. It's above the quarterly upper pivot. It's above the annual upper pivot. That's bullish. So buy the dip, right? Here's the quarterly pivot. We're testing it. If this can close back above this quarterly pivot at the end of March, well, I'm paying attention, and then I'll be looking for a short-term close above one of these upper yellow pivots. And if I look back, this is a good setup. We just need time to play out. So effectively, all these stocks here are from a scan, and we're just waiting now for the market to confirm in time. Another one is this LCUT stock. we raised this in the online community. So at the end of 2016, it closed bullish on several timeframes: quarterly, monthly, yearly, semi-annual. Just as bullish as you can get. The market got very oversold. Both of the monthly pivots moved under the quarterly pivot. We've exploded up, and now we're just making a range around this quarterly upper pivot. If that holds, then it looks like a good bottom there. So yeah, Shaun, is there anything else to add? I mean, I could keep running through these stocks. Actually, a couple of these oil stocks are interesting. I might just Marathon Oil, and because oil's been coming off. If I call up oil futures,
we had a bullwhip buy signal on oil on Wednesday, I think. So we had the break. We caught the break last week, and then we've had a daily bullwhip. So that said, take the profit on oil. Doesn't mean get long, because it wasn't at support. So oil is, we still long term, we're actually bullish of oil for the year. I know it doesn't feel like that at the moment, but definitely watching oil stocks, because they're obviously coming off. I mean, I think the other one that came off, there's a couple of stocks I want to show in Technician once you've done your bit. But.
Yeah, no problem. So, I mean, I think that's critical, what you just said there, Shaun, like the long term versus the short term. Oil. I mean, the way we see it is the market is in a long-term trend until it reverses the other way. So, what I'm trying to say there in terms of what you're looking at on this screen is, well, here's the end of 2017 right here. That was the annual upper pivot. There's oil. Right, we closed over it. So on an annual basis, that was actually the first time in 5 years that oil did that. So to us, that means you need to be careful for a major, quite a reversal to the upside. Now, obviously, the year is a long time. So markets can pull back significantly within a year. That doesn't change the fact that they're a buy, and it just determines what the focus of your trade should be. And that's what we've been saying is, okay, we've been looking for oil to break out. It's tried several times. If I look at these upper weekly pivots, these yellow ones, gold never closed over. So there was no reason to actually get involved in the move up. But that's not to say it can't go up from here. It's all about time, folks. So at the moment, we're now testing out this lower monthly pink pivot. If that can hold, there's no reason oil can move higher again. Or maybe it wants to fail here and then test out this quarterly level. It may even come all the way down here to the annual level and still be a buy. But the thing is being patient and waiting for the end of each period rather than jumping in and getting involved without letting the market tell you what it wants to do. So right now, the market's saying, well, we closed last week, we closed this week here negative. And so the market is negative until it can happen to get back above here on a closing basis. So no reason to be long oil at the moment on a short-term basis. But don't forget, last year we closed over this yearly pivot, so it can go up. So I'm very interested to see what happens in this little box here over the next week and a bit. Like if we did hold this monthly lower pivot and took off with a buy signal, well, we broke down and then held this 45 level and then took off again. I'm interested in that. But some of the stocks are kind of like, if you look at oil stocks like MROs, Marathon Oil, they don't look as weak as what oil is itself, even though they've had like decent pullbacks. So here's Marathon Oil, similar story, closed above the upper quarterly pivot, monthly and yearly pivot. So long-term bias up. If I look at these upper weekly pivots, we've never closed over it at the end of the week. So yeah, fair to say it's still weak. But we're actually a long way at the moment from closing under this quarterly pivot. And so really until then, I've got no reason to be bearish. it's just a corrective move down. So you just got to stick with the trend. If I look at, I think it's Murphy Oil, similar story. The thing is that they're actually approaching oversold on some levels. It's MUR, S.MUR. Okay, here we are. Okay. All right. So yeah, once again, right on time. This is another oil stock that closed bullish for 2016. It was overextended on the upside. It's a counter trend move, but this can be the perfect place to buy. We just need to wait and see in time whether these levels hold on the downside. So if you watch, we'll do a special for the end of the quarter. But these are the ones that we're going to be looking at, the ones that are like pulling back in an uptrend. These are the ones that are going to provide good opportunities if they manage to hold. Shaun, anything to add?
Yeah, just if you go into technician, there's a couple of stocks just want to update on. First one is VRTS. You don't need the range relativity on there, just have the system.
Oh, sorry.
Yeah, VRTS here. Yeah. So this was a signal a few weeks ago now. Sort of looked like it was ready to break. It did break and then it's come back again. So hasn't stopped out. It's pretty close to it. The other one is UAL. We've talked about airlines before, and in the inner circle, picked up about 10, 12 days ago. I picked up a day where I think it was the day that oil broke. Or no, it was before oil broke, but airlines were getting hit even though oil wasn't doing anything, and that connection between sectors or markets is very, you can't really teach that experience really. It's a little bit difficult. That's what we're here for. And that I suddenly went, oh, here we go. Airlines, which have been a darling for quite a while, now they're getting hit. And UAL has been a good example of that. And even though oil went down, airlines have been hit. So the short signal, and then we've had a take profit signal. I think the interesting thing there was, I think on Tuesday, oil stocks were down. Airline stocks were down like 5% on the day, and I was like, well, that seems a lot for one day. The move down in this stock had been 10, 12% in less than a week, which is by anybody's standards, unless there's a piece of news, then that's a pretty big move. And all it was the snowstorm in the northeast of America. Well, I'm sure there are plenty of snowstorms there, and their flights cancelled. So that move seemed a little bit overdone. We gapped lower the following day and we've reversed a bit. So been a nice trade though. A good example of, even though perceived bullish news for airlines, i.e. oil prices going down, and logic would suggest that would make airline stocks go up, and they do the opposite, they go down. So this sector rotation on fashion is very important. And I'm trying to think if there's anything else. It was a very quiet week. It wasn't very much hit on my radar screens. I suppose it's worth doing one of the banks. If you just do something like Goldman Sachs, so GS. Right, so this is an example where we had the gap higher a couple of weeks ago, and then GS is Goldman Sachs, so one of the biggest banks, and it's just drifting lower, so it's going out of fashion. That whole thing, it's losing all its oomph. If you do Key, K-E-Y, yep, if you put slam dunk on there, I think there was a slam dunk the day after it gapped higher. So you can take the system off. And just put slam dunk on there. Oh, it's probably another one. What else we got? Try USB or STI. There you go. So you had a power play, that green square back in November on Trump, so that was a signal to breakout. Gone all the way up, and then price gapped higher, and then reversed quite sharply. And we talked about it being what's called a blow-off top a couple of weeks ago, and it's sort of fulfilling itself and coming through. So for me, all the bullish news in banks is already there because we've had our interest rate rise, and they've didn't change anything about what they're going to do. If the Fed is going to do anything typical, they'll probably end up disappointing on interest rate rises. I mean, we've had years before in the recent past where they raised early on in the year and everyone's expecting another 3 or 4 rises, and then there isn't any, and that isn't good for stocks. So if anyone is long banks, I would suggest that it's time to run to the hills, take your money, and go and look for the next opportunities. But that's about it this week, really. Not a lot going on.
Yeah. Okay. Well, thank you very much, everyone, for getting involved. And thanks, Shaun, for joining. If you look in the message box, there is a 30-day free trial. You can click on the link there, and you'll get access to our software, and then you get access to our community site where we update on a 24-hour round-the-clock basis with what's going on in global markets. Open to questions, and all the information is there. So thank you very much for joining us tonight. Look forward to the end of the quarter, which is where we're going to get all our new signals. And there has been some developments in our capabilities in terms of identifying opportunities, and people in our inner circle are probably aware of those. So we're looking forward to milking those opportunities in the next quarter ahead. So I guess I'll just wrap it up there, and we'll see you next week.
Okay, see you, everyone.
Thanks, Shaun. Bye.
All right, cheers, yeah.